Welcome to our webinar.
I'm doing great. Thank you very much for having me. I'm really excited to talk to you guys for the next hour here.
Fantastic. Alrighty, how about we hop right in, Saagar? Why don't you walk us a little bit through your background?
Yeah, absolutely. So, my personal background, just for everyone on the webinar, is I grew up in the Midwest. Actually Cleveland born and raised. Went down to Ohio State for school, so I'm a strong Midwester. But for the last 15, 16 years, I've actually lived on the East Coast, live in New York City. My entire background is really public equities. So I started my career at JP Morgan Chase in their asset management, wealth management group, where I really learned a lot about asset allocation, tactical allocation, diversification. From there, I went to the sell side in equity research, covering infrastructure and engineering construction companies at KeyBank Capital Markets. After that, I went to the buy side for equity research, where for 9 years I was at a shop called Cohen & Steers. I was part of a $12 billion AUM managing team where we covered global infrastructure. So anything from utilities to midstream energy to railroads to green energy. Really a big spectrum there. About a year and a half ago, I actually left my dream career of working on Wall Street to jump from Wall Street to Main Street. And I joined Spark GHC and Green Harvest Capital, where I'm a principal and co-founder of the Spark GHC side. And I got to a point where I wanted to be a small business owner, where I wanted to help create jobs, where I wanted to give back to the community where I grew up in, and really add value and create diversification for investors. And so been in this position for about a year and a half now.
Amazing. And so give us a little bit more information about Spark GHC and what made you really make that switch. Like you said, you had your dream career, and now you are an entrepreneur.
Yeah, definitely. So, Spark GHC is a minority-owned, U.S.-focused private real estate firm. We're focused on developing, acquiring, and operating hospitality and joint development between hospitality and multifamily assets. We combined the resources of two companies, Green Harvest Capital, which was a legacy multifamily operator, and Spark Hotels, which was a legacy hospitality operator. And over the last year and a half, and then the legacy businesses, we have about 300 million in assets under ownership, consisting of about 2,500 hospitality keys and multifamily units. And the breakdown of that is about 1,500 multifamily units and about 1,000 hospitality keys. We have what we believe a strong, proven sponsorship team. Our sponsor team has a diverse background between Main Street and Wall Street. Some of us have come from a Wall Street background. We provide strategic thinking, financial acumen. We have an investor mindset, communication skills, and some of us are operators from the ground up. Some of my partners, they grew up in a motel, they grew up in a hotel, they took their first motel, they made it into a hotel, they bought their first multifamily complex. We have boots on the ground operatorship expertise on the team, from A to Z. And so we've combined both of that, the Main Street and the Wall Street experience, to have both of a top-down and bottoms-up perspective through that boots on the ground experience, along with an overarching kind of asset management expertise. What we focus on is really east of the Mississippi. We started in Ohio, and I'll go into a little bit more background in a second, but where Ohio started, but we've migrated from Ohio to parts of the Mid-Atlantic to even central New York. We really are focused on any assets east of the Mississippi. And again, we're not looking at your primary markets. We're not looking at your New York Cities, your Washington, D.C.s, your Bostons. We're looking at your secondary markets, what we feel like in terms of, those are the areas where we believe there's a significant disconnect between fair market valuations in the public markets and private market valuations compared to some of the bigger markets where everyone has their eyeballs on it. So we're really focused on, as I said, east of the Mississippi, secondary markets, areas where we think there's going to be a long-term economic resurgence, areas where there might have been strong manufacturing, strong steel. There might have been other industries that over time in the 90s and the 2000s slowly went away, but where we think there's going to be spend happening from the federal level or the state level or the local level to bring back jobs and bring back population, to really focus on those that economic resurgence areas, along with areas that have good, strong educational institutions, right? Good workforce opportunities, areas where you can go and get great employees and great teammates, good interstate rail and air connectivity areas, and then areas where you have low cost of living. So since December of 2022, Spark GHC, which is our hospitality and really our hospitality multifamily development arm, has acquired 8 hotels over the last since that time. We've put about 120 million to 150 million of capital out in terms of acquisitions of those hotels. And what allowed us to do that was obviously the team we've built, but then also the track record. So the track record for Spark GHC and the Green Harvest family of companies is very strong. On the hospitality side, we've given average returns of 32% over a historical period, and on the multifamily side, about 23%. Now, past performance is no guarantee of future results and future performance, but our track record, along with our diverse team, has really allowed us to take this business off. And why in particular? I think Dana, you also asked, what really led me to want to leave my dream career and focus here. I think number one, the people, the team, right? The leaders of this team, they're good people. You want to work with them. You want to grow a business with them. Two, we're doing this in markets that we all grew up in. I grew up in Cleveland. My partners grew up in parts of the Midwest. We want to give back to the communities that have given so much to us, right? And so by going in by buying multifamily and hospitality and putting money back into those assets, right? Creating a better product for either the tenant or the guest, right? Giving them a product that is upgraded, right? Compared to a lot of older stuff that might be in those markets. We really do want to give back to the tenant and the guests in the markets that we grew up, and also be a part of those communities, right? We want to invest in the communities through the investments into our assets, but we also want to be a part of that community. We want to be part of the organizations. We want to be part of the sports and youth leagues, right? And that was a part of it that I was really attracted to. And then second, just running a business, right? Getting to do something different every moment, right? My X call might be focused on risk management. My next call might be focused on investor communications. That other one might be on an operational asset focused call. So just a spectrum all across the line is something that really led me to leave the dream career and enter this world.
Fantastic. Now, you said you touched upon hospitality a little. Now, in my experience in the real estate market, hospitality isn't something that has come up a lot. It's always, commercial property. We're talking about multifamily apartment complexes. Talk to me a little bit about hospitality and why you think hospitality is such a unique asset class, Saagar.
Yeah, I mean, I think taking it back one step, diversification is the most important item, I believe, for investor portfolios. One of the key reasons why, another key reason why I joined this is, again, wanting to educate people from an asset allocation perspective and a diversification perspective. Many individuals out there are so focused on the S&P 500 or the NASDAQ or the Russell or the Dow Jones. And listen, I was one of those people. I worked on Wall Street, and all of my money was in the stock market, right? And I was one of those individuals, but I also learned there's a different world out there, right? That has different risk return characteristics and different business cycles. And so for us, getting investors to look at or giving them an opportunity to focus on, being invested into real assets or, real estate in this situation, again, a different diversification for your portfolios, different risk return characteristics in different parts of business cycles. Hospitality is one that we really truly like. We think that there's a significant opportunity in the hospitality industry that's developed due to the post-COVID world, due to an aging ownership base, due to higher customer brand awareness, due to very strong brands, right? IHG, Marriott, Hilton, those are very strong brands that drive a certain product to, at their assets. And then again, this belief that we have that, the Midwest or, certain areas east of the Mississippi, we think there's really good opportunities and we think there's a disconnect. But again, I think post-COVID, COVID has led to significant opportunities in hospitality, but you got to go and find those needles in the haystack. We think there's a significant aging ownership base, right? This is happening everywhere in real estate, right? But as the baby boomer as baby boomers are getting to a point where they actually want to retire, they're seeing that their kids don't want to take over. That next generation doesn't want to be your small business owner. They don't want to run your hotel asset or your multifamily asset. And for us, again, that's an advantage because that gives us opportunities to buy good assets that we believe fair discounts or fair prices.
Amazing. Now, you touched upon this a little bit when you went to the background of Spark GHC regarding the positive social impact you want to leave in the communities that you and your partners grew up in. You from Cleveland. So, what differentiates Spark GHC from other firms? And with that, what is your mission?
Yeah, so from a differentiation standpoint, I would say that, one, we have the track record, right? So, we have a track record there of strong results. Two, we have the combination of, again, Main Street plus Wall Street, right? The boots on the ground experience with the overarching asset management experience. From a mission standpoint, we have so a few key areas that we're looking at. One is daily guest experience, right? We want to improve the daily guest or the tenant experience through technological innovation. We think that's another area that there's an opportunity for us. Of a lot of these assets are owned by baby boomer generation or age group, and technology has not been one that they've historically spent a lot of money on. And so coming in with a fresh mindset, fresh skill set of technology, we think that's an area that we can add a lot of value. Two, we want to be strong stewards, as I noted, of the community where these assets are located, right? We don't want to just own assets in these communities. We want to be a part of them. We want to be on the Chamber of Commerce's. We want to be on the apartment association boards. We want to be on the hospitality industry boards. We want to really drive value back to the communities. We want to be a place where people want to work. Between our different businesses, we're probably close to about 250 or so employees across our shared services of companies. And we want our employees to want to come in every day, and our teammates every day. We want them to come in and be happy to be there, right? We want to give them medical benefits. We want to give them retirement benefits. We want to give them a good, PTO policy. And I say this because I experienced this on the corporate side, right? The corporate world where I came from, large corporations, they're already there, right? They give all those benefits, but your mom and pop multifamily operator, your mom and pop hospitality operator, they're just not there yet, right? But we have the ability to, aggregate these assets and put them under our portfolio, and then give our staff and our team members, the benefits that we think they deserve, and create a positive culture, right, for them to learn and grow, and where they can make a long-term career. And then fourthly, we're really big, give a healthy cash return and diversification benefits to investors and for their investment portfolios.
I definitely agree with that. With any successful business, I think not only for your investors, but also for the stakeholders within the business, like your employees, team members, them being happy and content with their jobs is very important. So I really love that that's a part of Spark GHC's mission. Now we walked through the background of Spark GHC, how you got involved in Spark GHC. Tell me a little bit more about your product offerings, and also how can investors utilize their self-directed IRAs with you guys?
Yeah, definitely. So, we, between Green Harvest Capital and Spark GHC, we have about 14 or so projects that have been launched over the last 4 to 5 years. And there's been typically two ways we've offered investors to participate in our projects. One is a simple promissory note. So for your X investment, we give you a X to Y% return guaranteed on the back of the asset and on the back of the entity. And that's an annual return, and typically has a 3 to 4 year term. And that's a very simple product, right? The investor is essentially a lender to us, right? And again, the way that we pitch that to investors is, if you want a defensive product, the promissory note product in our mind is extremely defensive. It gives you a good income stream. You're passive. and it's again guaranteed by the back of the asset and guaranteed by the parent company. And so again, every investor is different, but if you have money sitting in bond funds and you think rates are going to go up, or if you have money sitting in a CD or a savings account and you think rates are going to go down, or you just don't want to deal with the volatility of the equity markets, or you want a percentage of your portfolio focus on something more defensive or income focused, our promissory note product is just that, right? And it gives people that ability to get that, typically 10 to 12% return is what we offer on our promissory note product. Our other product, which is what we initially started with, we call our Class C equity product. Our Class C limited partner equity product is one where we give investors the ability to become limited partners in these projects, whether it's a hotel asset or a multifamily asset. You can become an owner with us, but you also have the protection of being a limited partner. Now, in that product, we give anywhere from a 15 to 20% return. Depends on the asset, depends on the project. And it's really broken up into a couple of ways. One, there's a preferred return. The preferred return is typically 7 to 9%. That is an annual number, but it's paid every 6 months. Second, there's some depreciation benefit, as the limited partner would have equity in the project. There would be some depreciation benefit as well. Third, there's some component at times of excess cash. So if there's any excess cash beyond a certain hurdle number, we would distribute that to investors. And then fourth, at the end of our cycle, which is typically we target 3 to 4 year cycles, if we sell and or refinance the property, the investor would benefit from the upside that we've created. And so there's two products, again, a promissory note product and a Class C equity product. In our portfolio, we have about 280 unique investors across the different projects now. And those investors are spread out all around the US. So not necessarily Ohio focused or any of that. We have people from California and Florida, New York, Georgia. It's all over. So again, 280 unique investors.
That's fantastic. Now, I'm actually curious, when an investor comes to you, which product do you see more demand in, for the promissory note component or the equity piece?
Yeah, it's typically on some projects we've only offered promissory, on some we've only offered the Class C, and then on some we've offered both. And I would say on the ones that we've offered both, it typically ends up being a third of it gets put in the promissory and 2/3 of it gets put in the Class C. And we also have a level that we cap the promissory at as well, because again, that's a guaranteed product, and so there's cash flows that we want to underwrite as well. And so we typically cap that around that 1/3 mark anyway. But typically, I would say 25% to 30% of a project, would come in at that promissory note level. And we've also given investors the ability to kind of split their investment as well. For if you don't know which one you want to choose, right? If you want a little bit of defense, you want a little bit of offense, and you don't know where in between, we've given the ability to split that.
So you have definitely given the investors the ability to diversify even within your projects.
Even within our projects. Yep, exactly.
Fantastic. And who does your typical investor look like? Accredited investors, middle-class Americans? What does your investor base look like?
Yeah, definitely accredited investors. So all of our investors, all 280 investing entities are accredited. That's number one, based on our legal documentation, is a requirement. I would say that middle class Americans. That's I think you kind of put that word in my head there by saying middle income, but it's your small business owners, it's your doctors, it's your teachers, your lawyers, your professors. You're kind of average American, really, that doesn't have access to a large institutional product. They might not work with a large wealth advisor that gives them access to private products that are out there. And again, what we tell these individuals is, again, we don't want all your wealth invested in one of our projects. We think, and this is just what we tell investors, is we think personally 20% of someone's asset allocation or their net worth should be focused on alternative investments. Well, we want to be a percentage of that alternative investment bucket of yours. right? And so we are very mindful when we talk to investors, and they say, hey, we want to invest X or we want to invest Y. Again, we don't give opinions necessarily, but or we don't tell people what to do, but we'll give them advice and say, hey, just want to be cognizant that this is, you're not using up all your money or something and investing in our projects, right? That's not what we're looking at doing here. Our key focus is, again, giving investors diversification in their portfolios.
Amazing. Now, let's pivot a little because I want to know, have you had any experience with self-directed IRAs, and how can investors utilize their retirement funds to invest with you?
Yeah, definitely. So we have had traction with and experience with self-directed IRAs. It's actually something that we started utilizing about 2 to 3 years ago. And to be honest, I was on Wall Street. I've been in investments my entire career. I myself didn't know what a self-directed IRA was until a few years ago. And I didn't realize that there's an opportunity to use retirement proceeds and use them from diversify them into items like private real estate, which is, essentially what we are, right? We are a way for investors to passively invest into private real estate. And this is, again, the self-directed IRAs are a great way for investors to take old 401k accounts, right, from prior corporate jobs you might have been at, to your IRA accounts that you have, and transition those into a self-directed platform with folks like Madison Trust. And we've used Madison Trust as as a company, but we've also used 3 or 4 other companies out there. And so, and everyone, to be honest, is great, right? Because in the end, what everyone is doing, what Madison Trust or others are doing, is giving individuals the ability to, again, take retirement proceeds that I would say are many times stuck in what the historical mindset is, right? Of, hey, I'm going to have my 401k and I'm going to have it in all equities or all bond funds, or I'm going to have it in some mixed use product that's 65% equity, 30 and 35% bonds, right? But again, well, by moving some of your proceeds over to a self-directed, what it allows you to do is, again, get access to other investment types, right? And the one that is, obviously, this one is private real estate, but there are others as well.
Of course, and just to add on to that, I really like the fact that you said you yourself have been in Wall Street, but didn't know self-directed IRAs weren't a thing, because self-directed IRAs have been there since 1975, but such an underutilized retirement resource in the retirement world. And that's why we want to have educational resources like this, so people out there, the middle class Americans that we do talk about, will know that they have these resources to diversify their retirement funds. It doesn't need to be in that 60-30, 60-40 portfolio that you were talking about.
And I really appreciate you folks having me on the call and allowing me to talk to you guys about hospitality, multifamily, and Spark GHC.
Of course, Saagar. Thank you so much for joining us today.